Welcome back to FT Markets. We're here to talk about commodities, which have been performing really badly in recent weeks, almost across the board. With me to talk about the situation is Neil Hume, the FT's commodities editor. Neil, we've got a lot to talk about today. What's really been the essence of what's been going on in commodity markets for the past few weeks?
Well, the outlook has certainly darkened very significantly, and there's a sort of a trifecta, I think, of sort of factors that are weighing against commodities at the moment. We've got the oil market very weak at the moment. There are concerns about demand. That seems to be slowing pretty much everywhere, apart from some pockets in Asia and the US. We've also got sort of ample supplies of oil as well that sort of created a glut on the market. There's production coming back from Libya. But on top of that, we've got some other factors as well. So things like soybeans and the whole grains market, that's been very weak. In the northern hemisphere, it looks like we're going to have a bumper harvest this year, record harvest coming out of the US. So that's putting pressure on prices there. To cap it all off, we've now got concerns about slowing economic growth in China. We've seen some figures come out of the steel industry there, which point towards a slowdown, and that's sort of weighed on the prices of iron ore, which is at a 5-year low below $80 for the first time since 2009. So,
and it's strange, isn't it? Because the year started so well.
Yeah, I mean, if you look at the chart, I mean, in the first quarter of the year, commodities outpaced everything. Total returns, as you can probably see from this chart here, were great. I mean, they built about every other asset class in the world, and there were a couple of things happening there. We had the polar vortex in the States, which pushed up gas prices. We also had a drought in Brazil, which that helped the grain prices, soybeans back then, and then we also had some Black Sea tensions, which helped push the oil price up. But of course, this is all reversed now, and prices have slumped. So in the third quarter, commodities went from being, top of the class to the dunce at the back with the cap on. And now we're seeing sort of investors looking at commodities again and thinking, oh, actually, do we want to keep money in this asset class or not? And we're seeing some money start to come out, whereas at the start of the year and even into the second quarter, hopes were high that commodities were making a comeback as something that was really investable for people.
And the movement of the dollar over recent weeks hasn't exactly helped the markets either. Quite often commodities and the dollar are not very good bedfellows.
Well, no, exactly. I mean, you can see there the way the dollar's strengthened just on expectations of what the Fed might do in terms of interest rates. But yes, I mean, it's another headwind. I mean, I wouldn't say for a moment it's really sort of, driven the sell-off. It's certainly exacerbated it. Although gold, it's provided, a real headwind for gold. I mean, that sank below 1,200 an ounce recently, although it's bounced back up after the latest comments from the Fed. But it's providing another headwind, another thing that commodities could probably do without.
Now, you mentioned oil, clearly the most important commodity in the market still. Brent's been having a terrible time in a bear market, indeed, in recent weeks.
Yep, that's right. I mean, it's sunk almost down to below 90 for the first time in quite a while, as we can see from that chart there. I mean, it's been a huge fall from mid-July, when it was sort of mid-June rather, when it was at 115 on concerns about ISIS sweeping across Iraq and what that would mean for production in the Middle East. But now we've got to the point where people are saying, does OPEC actually need to come in and cut production to sort of shore up the price or not? Because the Atlantic basin is awash with crude. The Americans are pumping lots and lots of oil. That's sort of offsetting stuff that used to be imported into America. That's trying to find a home. Prices are having to come down in order for people to buy it. So yeah, I mean, it's a pretty depressed market at the moment.
Depressed across the board. Are there any bright spots in commodities markets?
There are a couple. Coffee has been a good market this year. Cocoa as well. But I mean, really, that is about it. And it's difficult to see things getting better in the final quarter of the year. It doesn't seem as if there's going to be much of a reprieve for oil markets at all. The harvest is just coming in the US, which will probably, keep a lid on or prevent prices, in sort of commodities, agricultural commodities from rallying. And also then we've got the question of China. It doesn't look like there's going to be a big stimulus for the government. Their growth looks to be slowing, so it's difficult to see why, I don't know, the price of iron ore, for example, or thermal coal will actually move higher in the, sort of the back end of this year. So yes, unfortunately, a pretty gloomy picture, and I'm expecting to see some sort of outflows from commodities as well when the numbers are published.
Thanks so much, Neil. So there you are. We have a picture of commodity markets. Going to be a gloomy winter, it seems, across the board, with the exception of coffee and cocoa. Perhaps agricultural commodities are the place to be. But otherwise, a bleak picture for investors coming up. Thanks very much.